Hi everyone, welcome to the post-market report for 23rd July 2026. Here we are going to discuss how the markets traded today along with some stocks in news as well as bonus coverage of a commodity in focus. First and foremost, we will look at how Nifty traded today. Nifty opened lower and after a brief attempt at recovery, traded with a mostly negative bias to end the day in the red for the third consecutive session. The NSE index fell by 0.53% or 126.65 points to close at 23,869.60. The correction seen today was due to elevated crude oil prices amid heightened geopolitical tensions in the Middle East, weak rupee and FII selling. Most sectors ended in the red with chemicals and realty emerging as the worst performing sectoral indices. Auto and media were the only sectors that ended in the green. Volatility for the index rose slightly. Since the index closed slightly above the support mentioned in today's pre-market report, levels may be kept the same as today morning, with supports remaining at 23,865 followed by 23,795, while resistances may be placed at 23,965 followed by 24,050. For tomorrow, Nifty may witness some buying momentum, especially if crude prices correct or remain muted, mostly on account of a value buying close to an important support level of 23,795. If a correction is seen in semiconductor-heavy Asian indices, the recovery may be stronger and will probably be led by buying in IT stocks. However, if crude prices rise significantly, the current selling momentum may be strengthened further, thereby sending the NSE index lower. Nifty may be expected to become more bullish above 24,535, while a fall below 23,795 could lead to bearish sentiment dominating. Next, let us take a view of how Sensex traded. Sensex fared slightly better than Nifty, as it fell by 0.47% or approximately 364 points to end the day at approximately 76,391. Levels for Sensex need to be adjusted downwards following today's correction, with supports now being at 76,380, followed by 76,080, while resistances may be placed at 76,630, followed by 76,900. Sensex may witness positive momentum if 78,385 is breached on the upside, while a break below 76,080 could make the index bearish. Now, we will take a look at the moves seen in crude oil. Crude oil prices opened gap up once again today and has been trading with a mostly positive bias. Attack on crude oil vessels traveling through the Red Sea by the Houthis, who are allied with Iran, has added to supply concerns in addition to the closure of the Strait of Hormuz, which sent prices higher. Volatility for the has spiked. After the recent gains, crude levels need to be adjusted upwards, with supports now being at 8,640, followed by 8,495, while resistances may be placed at 8,810, followed by 8,960. For today, crude oil prices may be expected to keep trading with a positive bias, with bouts of corrections in between due to profit booking after the recent rally. As both the Strait of Hormuz as well as the Red Sea, which serves as an alternate route for crude transport out of the Middle East, are being blockaded by Iran and its allies. A supply shock may build up, thereby affecting prices positively. Traders may continue with a buy-the-dip approach with a close watch on updates from the region. The energy counter is currently bullish and may witness bearish momentum if a correction is seen at the energy counter that sends prices below 7,885. Finally, let us look at a few stocks in the news today. Tanla Platforms reported a strong Q1 FY27 performance, with net profit rising 20% year-on-year to 142 crore rupees, while revenue increased 18% to 1,226 crore rupees. The better-than-expected earnings boosted investor confidence, sending the stock up nearly 17% during the trading session. Cipla reported a 39% year-on-year decline in Q1 FY27 net profit to 789 crore rupees, as higher operating expenses offset modest revenue growth. Despite revenue rising 2.3% to 7,119 crore rupees, the increase in costs weighed on profitability, and the company also announced the appointment of Dinesh Jain as its new Chief Financial Officer. PTC Industries has secured a DRDO order to develop a critical component for India's indigenous lightweight tank program. The contract marks the company's transition from contract manufacturing to design-led development, strengthening its presence in the country's defense manufacturing sector. Before we sign off, we would like to let you know that free webinars will be conducted on Friday and Saturday. On Friday at 3:15 p.m., Mr. Sanjay Ji will be conducting a webinar on the topic Rule-Based Candlestick Strategies for Identifying High-Probability Trading Opportunities. And on Saturday at 12 p.m., Mr. Amol Chapi will be conducting a webinar on the topic Nifty and Bank Nifty Opening Range Breakout Strategy with Multi-Time Frame Analysis for Consistent Trading. Do check the description for the webinar links. With this, we end our post-market report for today. Thanks a lot for watching. And as always, do not forget to add a like, share the video and subscribe to our channel for stock market related updates.